We're joined at the desk by Byron Lotter, Portfolio Manager at Vestact. We look at the day's trade on the JSE. Hi, Byron.
Hi.
So closing in reasonable territory today, and we opened on a new record high. It just seems unreasonable, like something from a fairy tale.
Yes, today for a change, resources are actually pulling through. We've seen in the US S&P 500 doing nicely. You know, and I look for headlines when you see these kind of market moves, and I'm so tired of seeing European banks or European Central Bank looking to ease the situation, and the Fed looking to pump money into the systems. To be honest, I think this uptrend is because of the good earnings that we've seen coming from the US earnings season. You know, a big global company showing good growth in developing markets. We had an update quite recently from Richmond which showed that, in fact, you know, growth in China was still going very nicely, and it's just sentiment in general. We know that companies are very well positioned and they've learned from their mistakes. There's lots of cash floating around, so sentiment picking up. Good to see.
Sentiment not working in the favor of Able right now, though. I mean, the stock on the day almost 6% in the red. It fell back yesterday. That Q3 trading update. What spooked the market so much? I know you've gone to that investor conference. So what did you get from management in terms of the outlook right now?
Yes, normally I don't like to go to these kind of things because you can literally just read the updates and get all the info you need. But Able were doing a special conference and a presentation and looking at the macro situation in terms of micro lending. Obviously, there's been a lot of talk about a potential bubble. The unsecured lending has picked up from 5% to 10% of total credit in South Africa, and 40% of all new credit in South Africa is now unsecured lending. So there's no doubt that the market is growing hugely, and they did clarify things. You know, they said that the growth is more from a supply side, and banks are more willing to give out unsecured lending as opposed to secure lending, and there's obviously a lot of demand for it. You don't need any collateral. All you need to do is to prove that you have some sort of income, and you can get that you know, you can get that kind of lending, which
would make sense. Why the market uncomfortable with this right now?
Well, you can understand, and the African Bank are very well aware of this. You know, I felt quite comfortable leaving the presentation knowing that they had things, you know, under control. They're looking to make around R4.30 a share, trading at 35 Rand, R4.30 next year for 2013, trading at 35 Rand. You know, most of the negativity really is factored into the market. I mean, they're growing their loan book by 35%. And I still think that there's a lot of potential in terms of demand going forward. We're still coming off a low base. There's a lot of need for credit in South Africa with such a big informal sector. So I still think there is a lot of potential for growth. Yes, the supply is growing no end, you know, coming from the big four and the likes of Capitec, and supply will meet demand at some stage, but I still think the return on equity is going to be good for African Bank going forward.
If you extend that to the theme of the South African consumer getting mixed messages, but it's certainly clear that if you're in the civil sector, the public sector, your wage increases are pretty healthy, and I think driving some of that appetite for further borrowing. And Massmart giving its full year trading update, definitely disappointing the market, even though it was a fairly reasonable expectation. Headline earnings per share up by about 34%. The market expected much more. We know these retail stocks are priced for perfection.
Yeah, the company is looking very expensive at the moment. You know, even if you exclude the costs of the Walmart acquisition, they're trading on something like a 25 PE. So there's very high expectations, but we've been talking about this for a while now in the office, and whether we should carry on buying these retailers, and they carry on doing well. And you have a look at the owner base of these companies, and you'll see that a company like Massmart is nearly 90% foreign owned. So it's not the South African market that's determining the prices of these companies, it's the foreigners, and they still see potential growth, and they're happy to pay up. When you have a look at Walmart in Mexico, they're also trading on a 25 PE. So there's obviously the foreign investors are really liking what they're seeing in terms of the African consumer. Right. So I wouldn't be too deterred by these high valuations, because I think they're going to carry on trading at this kind of premium.
So if we can close off, sorry, Sam, the RMB listed a mid-cap ETF today. So interesting, so stock size from the 41st biggest stock down to the 100th biggest stock. So it's an interesting exposure to that segment of the market, excluding.
Yeah, exactly what I was going to say. You know, interesting exposure outside of the top 40. Do you think there's going to be strong demand for that?
What, in terms of mid-cap?
Yeah, and then this mid-cap ETF, a good idea to come to the market with a product like this, first in South Africa.
Yeah, I mean, it's great to see, and it has comfortably outperformed the Aussie 40. But I think you've got to look at it per company. When you have a look at the exposure they have exposure to the likes of life, healthcare, companies that have really done well, Mr. Price, a lot of retailers, and not much resource exposure, which we know hasn't done well of late. So you can look at it in two ways. You can look at it per sector and per the companies they're buying. But again, you know, like I was mentioning, companies are well positioned, and these mid-cap companies, you know, they're coming off quite a low base. A lot of the mid-cap companies don't have a lot of international exposure to the developed markets, so they're purely focusing on Africa, and that's where the growth is coming from. So that's why you're seeing these companies doing so well.
Byron, thanks very much. Byron Lotter is a portfolio manager at Vestact.